Meta's stock has gone to the moon this year. It seems nothing can stop its growth, not even the metaverse haters. A big chunk of investor confidence comes from the fact that Meta has apparently given up on the metaverse. There were layoffs in Meta's Reality Labs division responsible for the metaverse project. A shift in focus was seen as Meta pivoted to a more AI-focused approach through the establishment of new top-level teams to work on AI. Mark Zuckerberg himself put up a Facebook post saying he would start putting together teams working on generative AI. Over the long term, he planned on making AI personas that can help people in a variety of ways. Considering Meta's sudden shift to the metaverse was the thing that made investors sell Meta stock in droves, investors were relieved to find Mark Zuckerberg decided to focus a little more on AI than the metaverse. This allowed Meta's stock price to recover. However, Mark Zuckerberg never really gave up on his metaverse dreams. He just pushed his metaverse plans further down the road. Whether the Facebook metaverse will succeed is unknown. What is known is that Mark Zuckerberg's metaverse spending has reached a dizzying $40 billion in spending. It's okay to lose billions of dollars now because Facebook's ad revenue has improved. Aside from the metaverse, another issue with Facebook that scared investors away was its slowing ad revenue growth. This time, in a recent Q2 earnings report, Meta's revenue growth has risen. They beat analyst expectations as earnings per share was higher than expected. Revenue jumped 11% year over year to $32 billion, higher than the $31 billion analysts had expected. This led Meta's stock price to rally above 7% in the after-hours trading session after the earnings report. This is an incredible feat since usually stock prices tend to fall after the earnings call when there is no good news. And even if there is good news, it usually takes something unique to drive up the stock price after the earnings report because many investors tend to buy stocks towards the earnings report dates in anticipation of the rise in investor sentiment and the stock price before dumping the stock during or after the earnings call. So Meta's stock price rising by 7% after earnings is a good sign for the company and its lizard-in-chief. Meta's results reflect the rebound in online advertising as well as other quality of life changes at Facebook's headquarters. The improvement in the company finances had a lot to do with what Mark Zuckerberg promised to do in December last year. At last year's Q4 earnings conference, Zuckerberg announced his management team in 2023 was the year of efficiency. That included mass layoffs. Roughly 20,000 were let go, cost-cutting by dumping unprofitable projects, and a return to Facebook's core focus, advertising. An unexpected factor which propelled Meta's stock price further was ChatGPT. By taking the world by storm, ChatGPT cemented AI as a way for companies to move forward. Now, AI may not have made any company rich yet, save for Nvidia that got rich because AI companies were buying up Nvidia cards to train their AI's language learning models. The thing to understand is AI is hot right now in the investor world. Many analysts are monitoring how many times companies are mentioning AI in their earnings report. If the word AI was mentioned more times, that means the company might become more profitable because of AI. As ridiculous and stupid as that sounds, many companies have seen their stock prices rise simply because they told everyone they were working on new AI models. Adobe introduced their Firefly AI, which enabled users to create images and do Photoshop-related tasks by entering prompts. This caused Adobe stock to rise. Microsoft introduced their AI, which was basically ChatGPT on steroids, because they bought over 40% of Sam Altman's company and integrated it into their Bing search engine. This caused Microsoft stock to rise. Google messed up their Live from Paris event. Their presenter lost her phone that she was supposed to use to show people how great Google's Bard AI was. People were upset because the AI demonstration wasn't good enough. This caused Google's stock price to fall. Meta, in partnership with Microsoft, introduced their new AI model Llama 2, which people can use for free, even if they want to make money from Meta's AI.
And so one of the things that we are very excited today is the announcement of Meta's Llama 2 coming to both Azure and Windows. Meta has been doing phenomenal work in innovating in the open models, and Llama is sort of really captured the imagination of what open source and AI foundational models can do.
Llama 2 is a threat to ChatGPT because while OpenAI charges money to use its GPT-4 AI model, Meta's AI is free for commercial use. That means businesses get to use Meta's AI for free. Meta's Snapchat unit has invested in AI to improve its ad targeting capabilities. Mark Zuckerberg even confirmed that using AI to improve the personalization of user feeds and its recommendation systems were clearly paying off. There was a barrage of news regarding Meta's pivot to AI. This caused Meta's stock price to rise further. That wasn't all. In addition to the improved ad revenue growth, less emphasis on metaverse announcements, lower costs as a result of the mass layoffs, and the introduction of a commercial readily made AI like Llama 2, Meta, or rather Mark Zuckerberg, did something special that took the internet by storm this year thanks to Elon Musk. A few weeks ago, Elon Musk and Mark Zuckerberg almost got into a cage fight because Mark Zuckerberg planned on releasing a Twitter clone. Now, ordinarily, releasing Twitter clones doesn't usually guarantee overnight success. Many startups have tried and failed. The reason Meta's attempt at a Twitter clone succeeded was because of Elon Musk. When the Threads app was released a few weeks ago, it managed to reach 100 million signups. Many new Thread users came from Instagram, as you could bring your followers from Instagram into Threads. Because Threads was integrated with Instagram, there were also many Twitter users who signed up to Threads because of the FOMO and their dissatisfaction of Twitter under Elon Musk's rule. Elon Musk has made several changes to Twitter after he bought it. Many Twitter users did not like the new Twitter Blue subscription. They didn't want to pay $8 for a checkmark. There were other things Twitter users didn't like, but we won't go through all of them here. What you need to know is Elon Musk tried to limit the amount of tweets a user could see on Twitter. That rate limit caused Twitter to crash and die on many people's screens. Instead of the Twitter feed, what they saw was either a blank page or the words "rate limit exceeded" once they read a certain amount of tweets. This made many Twitter users very angry. Coincidentally, right when the anger for Elon Musk and Twitter was at its peak, within this narrow window of opportunity, Meta launched Threads. The angry Twitter users flooded the Threads app in droves. Many who did not have an Instagram account had to sign up for one because you had to have an Instagram account to sign up to Threads. This means Meta got millions of users on both Threads and Instagram. While Threads isn't profitable yet because there are no ads, Threads activity has also fallen dramatically in the past week. But the thing is, consumers are starting to dislike Elon Musk's management of Twitter more and more. Elon just gave them more reasons to after he renamed Twitter. So Twitter's branding power is weaker now that it is called X. Facebook survived its rebranding from Facebook to Meta, so Twitter should also survive as X. The point here is if Threads can get even a small portion of Twitter traffic over time, which is clearly possible now that Twitter's brand has been diluted, that's a win. Investors are cautiously pricing in the possible profitability of Twitter's rival Threads into Meta's stock price. And that is why Meta's stock price recovered from its total collapse in 2022. A combination of growing ad revenue, less metaverse announcements. They're still burning money, but who cares? That's the investor sentiment. There was a hard pivot to AI through Llama 2, and Meta introduced a Twitter rival called Threads that could be profitable in the future. Meta stock still has a long path ahead of it to regain its previous highs. I hope you liked the video. Leave a like if you did and subscribe if you haven't already. It's much appreciated.